Can you hear me? That's the question. I think you can hear me. I can't hear you, but I hope you can hear me. Welcome to the Thursday evening or Friday morning, depending where you are. Financial Thing live stream. Did you miss me? I missed you guys. Been away last couple of weeks, not been here, but here today, here this evening. That is what is important. Hope you guys are having a great week. Yeah, what's been going on? I was away 1 week. I decided to take a week off, and then, of course, the following week, disastrously impactful Hurricane Helen or Helene, affected us. And I don't like to be here during potential storms like that. They're kind of stressful. I don't know. You don't have to deal with them as much in the UK as we do here in the tropics, but they can be extremely disruptive and annoying and kind of just depressing. So I thought, well, if there's any chance that that storm was going to come and hit this area, I was going to go eastbound. So I went eastbound. Happened to fall on a Thursday, so yes. But listen, I'll plan on being here next Thursday, which is the 10th, and then I'm taking a holiday on until the 26th. So next couple of Thursdays after that, I will not be here, but come back on November 7th because we're going to have a Cufflink live show with Natalie Weeks and another person who I can't honestly remember who it is, but somebody from Cufflink is going to be here. We're going to talk about Cufflink, peer-to-peer lending, what's going on over there. So November 7th. But yeah, I'll be here next week on the 10th of October, and then 2 weeks off back on November the 7th. So it's holiday time. I actually get to get away. So anyway, Harley is here, of course. She survived the storm with little much thought in her head. As long as she was getting fed, she was cool. And what are we talking about? Oh, let's do our quick housekeeping. Of course, sponsor of the show. It's Cufflink. Earn up to 9.13%. Interest gross per annum over £350 million invested since 2016. Zero investor losses to date. Your capital is at risk. Please don't invest unless you're prepared to lose money. Please check rates on Cufflink's website as interest rates do change. You can sign up at join.cufflink.com/financial-thing or click the link in the description down there. I know most of you have Cufflink accounts, but if you don't, check them out. Please hit that thumbs up, subscribe to the channel if you can. Consider joining the Patreon. It's in the description. Thank you to everybody that is a Patreon member. You are much appreciated. Some of you guys have been Patreon members for a while. So thank you. Much love. Yeah, what are we talking about tonight, this evening? We are going to talk about some peer-to-peer lending news, catch up on some news stories that have come out the last couple of weeks. We had a couple of interesting letters in the mailbag about peer-to-peer lending and crowdfunding also. So we'll talk about that. We'll take a look at the Trading 212 portfolio, see how we're doing on that. Catch up since it's been a couple of weeks. And other bits and pieces. Hopefully you'll find the content interesting, informative. If you have any comments or questions, put them in the comments. And we'll go through them at the end. But hello to Paul in Kenilworth. Mike Powell is here. Colin Perry in the Peak District. Of course, Stephen Hale in Nottingham. Paul Bagworth said he can hear loud and clear. Thank you, Paul. Peter Vince, hello from Leatherhead in Surrey after the USA has suffered with Hurricane Helene. I'm not even going to mention the slightly miserable weather we've had here. Oh, drat, I just did. Very funny. Aki Chap, hello from Accrington. You know the funny thing about the storm too, a lot of people moved from different parts of the USA up to North Carolina in the mountains because they always kind of assumed that that was a bit of a safe spot away from climate issues like storms and hurricanes. What we've come to learn about our current world's weather system is that wherever there is possibly bad rain, you're going to have pretty bad disastrous times with flooding and landslides and stuff like that. So unfortunately, the poor people of North Carolina, especially the Asheville area, are experiencing pretty drastic weather conditions, as well as people in Florida and very low-lying areas. Here in Orlando, we're a little bit more inland, so an hour and a half from the East Coast. Sorry, about an hour and 20 minutes from the East Coast, an hour and a half from the West Coast. We're not close to 2 hours, so we don't tend to have so many issues. Of course, we always have flooding concerns and whatnot, but yeah, it's really sad what's happened with the weather, and it's just something where no matter where you live in the world, usually not immune from weather issues. Rain is becoming more of a problem nowadays, it seems, with flooding and the water. Just get large amounts of rain, the water doesn't go anywhere. But didn't get flooded here, thank goodness. So anyway, let's get right into it. Let's have a quick look at LoanPad, since it's been quite a while since we've had a little shifty there. See what's going on. Not really much change in LoanPad. 183 million in total loan value, and LoanPad's got 96.6 million pounds, whereas the lending partner is 87.2 million. That average loan to value right here has just stayed identical at 42%. Average loan size 416,000. Average lender 17,629. Not much changing with the lenders either. 5,598 registered lenders, 19 lending partners, and 0 happening with the interest coverage fund. That is a good thing. That means it's not being used to service any interest on any loans at the moment. Estimated time to sell and to invest less than 1 day. Very kind of standard, but you'll see here the total number of LoanPad loans since inception in 2019, 753, and 521 of those have been paid back. So that's pretty good. They seem to just continue on the same path. Waiting for that update that is hopefully going to be here before the end of the year, where we may see the £10 minimum of that interest being rolled into your investments drop down to a penny. We hope so. Let's see what happens. Let's talk some news. Shojin's up first. Shojin partners with Dubai real estate broker. Look at that picture of Dubai. I've never wanted to go to Dubai. It's just one of those places that I have zero interest. Have you ever been to Dubai? What has your experience been like? But I just really don't. It's not on my. I wouldn't even say it's in my top 100 of places that I would like to go in the world. But Shojin has partnered with Dubai Real Estate Brokerage, and the name of it is Anna Rock, which will open up new investment channels for both clients of both companies. Under the terms of the agreement, Shojin's UK-based clients will be able to access Anna Rock's premium real estate offerings in Dubai. That's kind of interesting. Meanwhile, Anna Rock's clients will be able to invest in UK property opportunities listed on the Shojin digital platform. Shojin says, we're excited to partner with Anna Rock and expand the reach of our property investment opportunities to a wider global audience, especially in Dubai and the Middle East. This collaboration gives us closer towards our vision of making real estate opportunities more accessible to global investors, enabling them to build their wealth. The partnership comes after Shojin took part in a trade delegation to Saudi Arabia earlier this month with the intention of growing its presence in the Gulf region. The property lender has been on a global expansion push of late, entering into a number of international partnerships designed to expand its presence across Asia and the Middle East. It's an interesting concept, right? Because I think there's a lot of people that would probably still like to dip their toe into investing in property, maybe loans, maybe just property in general over in different countries, but it's still one of those corners of investing that has not been made very easy to us at the moment. I think that is a opportunity for change. With the internet, right, it should be easier to invest in property in different parts of the world, but property is what property is, and it isn't easy to invest. So maybe these types of partnerships are going to make it easier for people to invest into real estate in different parts of the world. I would question the fact that being the Middle East, I mean, not to get into politics or too much at the moment, but we have some pretty turmoil things going over in the Middle East. I know not Dubai specifically, but bringing that kind of attention onto my company, partnering with companies in the Middle East might be a little tenuous. I don't know. I don't know how regulators look upon that kind of thing, but obviously Shojin has an idea in their mind for what they're trying to accomplish, and I do find it somewhat interesting. For our European peer-to-peer fans out there, Mintos has secured €2 million in debt funding from FlyCap. Alternative investment platform has negotiated a deal. That's a Latvian company that is growth capital fund, and FlyCap is going to give them about $1.7 million. The funds will fuel Mintos's growth initiatives, including customer acquisition efforts across the EU. The latest fundraising effort follows a crowdfunding campaign with Crowdcube, which Mintos raised €3.1 million from more than 3,300 investors in more than 55 countries. Yeah, and stay tuned. We're going to talk a little bit about Crowdcube, because that was one of the things that came through in the mailbag a couple of days ago about Seeders and Crowdcube. Something we really don't talk much about on the stream, but we're going to address that also. But yes, Mintos has been very active. This is their Crowdcube campaign that they launched in, I think it was April of 2024, and they raised €3.1 million from 3,329 different investors, giving an equity of just 2.55%. So the value of the company now is, well, back then was €120 million. They had a net profit of 727,000 in 2023. Imagine that. You do the numbers on that, right? If your valuation is €120, you have a net profit of 727,000. What is that, about 0.4%? Does that company look like an attractive investment to you? I don't know. It doesn't to me, but still, 3,329 people thought it was a very attractive place to go ahead and put €3.1 million of their money into. Yes. Interesting. I don't know. We're gonna talk about that a little bit later. Let's continue on. European peer-to-peer lenders are becoming reserve of seasoned investors. This was a very interesting article. Came out September 24th. The number of Europeans willing to invest in peer-to-peer platforms is decreasing amid growing engagement from loyal and experienced participants in the market. The study referred to data on 63 platforms. Basically, what this is saying is that it's putting a very positive spin on peer-to-peer, which appears to be quite negative data. It's saying that younger people, new investors, do not find significant incentives for widespread engagement in a new area. So the article is basically saying that specifically in Europe, that peer-to-peer lending is being propped up by people that have been investing in peer-to-peer for a while, like people like you and I. When it comes to new investors, they are not very quick to jump into peer-to-peer lending, if at all. Then they have little interest in it. And part of that is just because there's not really any growth, I think, in attracting new lenders in Europe. If you Google peer-to-peer lending, just generally, you're going to see some pretty old results with regards to news. Let's see. Let me Google it. I'll show you. Like, this is if I Google peer-to-peer lending, right? Hopefully you can see this. See if I zoom in. Does that show? Yeah, there we go. So first thing in Investopedia, generic peer-to-peer lending article. Here's something from CNBC wrote in September 24th. Okay, that's kind of a new article. Usually I don't see a lot of new things, but a lot of it is just, not really anything new. There's not any real news. There's just general articles. How does it work? Sometimes they put up these generic articles, but not too much news. Let's see. Click on the news ad. And of course, because I'm searching from the US, I'm going to have different results than you. We got a news story about India. Red flags of peer-to-peer lending March 6th. Peer-to-peer lending surges to 1,709 billion. But there's very little education, and especially for young people that rely on things like social media. Or I say young people, young as, people are in their investing youth years, I consider in their 20s to 30s. They rely on social media a lot, and there's just not that many people covering peer-to-peer lending. So not like stocks and cryptocurrency. You're just not going to see a lot of growth, I don't think, with new investors coming in. And hence, that's one of the reasons why LoanPad, you'll see here, this number of total lenders has been pretty stagnant for a while. We did see a bit of a boom between, I think, the 3,000 lender mark up to the 5,000 lender mark. We saw that rise pretty quickly, but then it's been stuck in the mid 5,000 for a while. You're just not seeing access to new customers coming on board. That's the state, I think, of peer-to-peer lending. So that article touches upon that, and it's saying that us old schoolers are really propping up that market possibly for now. We'll see if that changes. It's been my goal, to provide some education. But am I reaching the younger crowd? I don't think so. Quick little bits of news here. This is going to be a shorter stream tonight because there's not that much to talk about. Having said that, I usually end up going an hour, but we'll see. Folk2Folk appoints Carlos Howard as head of business development. So this is Carlos Howard, who's had 20 years of leadership experience in financial services, legal and manufacturing sectors with a focus on sales, customer care operations, and strategic roles. He has been hired to really grow and develop their business. I would imagine, again, to reach out to try to bring new customers on board. In other hiring news, Cufflink has named a new head of sales. Look at that guy. He's very serious. Brian West, he is the new head of sales. He has more than 25 years of experience in the property sector, having held senior roles at GE Capital, that's General Electric Capital, and I think General Electric, GE Capital, maybe, and Swift Advances. He also works with specialist lenders such as Funding 365 and Pivot, and has served as a board director for Bridging and Development Lenders Association. As a head of sales, Brian will work closely with Cufflink's CEO, Narinda, who I'm still waiting to come on the stream, and the senior leadership team to grow Cufflink's business in the coming year. I don't know if that's growing in retail side, bringing new customers on board, or if that's on the lending side. Maybe it's both. But he is now the new head of sales for Cufflink. Peer-to-peer lending has returned 7.36% per annum over the last decade. Fourth Way and their direct lending index has calculated that over a decade's worth of peer-to-peer data, we have realized that some of the industry's large players have provided an overall return to investors of 7.36%. Of course, there have been ups and downs. I've mentioned about this data before that I think, yes, if you total everything out, very accurate. Of course, nobody is invested in every peer-to-peer lending company and every loan. So I think those numbers are quite misleading. This article also says over the past decade, share investors in the FTSE 100 companies have made 4.9% per year after investing dividends and after costs. I'm not a fan of this number, this 7.36%. That includes, by the way, after bad debts, but there is no way to invest in every peer-to-peer lending loan and every company to achieve 7.36%. Most of us are going to try to invest where we think the good companies are and what they're offering, and we're going to try to get some kind of a decent return. I think probably for most of us, depending on your risk appetite, most people that I have had experience with are getting in between 5% to 8%. Your 8% is the higher risk takers, and they're highly concentrated in the higher interest rate loans, in the higher interest rate offering peer-to-peer lending companies. But most conservative people, I would consider myself quite conservative. We're getting about anywhere 5 to 6% range per year, provided we don't see any fallouts of other peer-to-peer lending companies going into administration that we've had in the past. So, but yes, the overall number, 7.36%, looks nice, right? Over 10 years of data. Does it look nice compared to the S&P 500? Questionable. I think it's a good part of a diverse portfolio. S&P has certainly done better than 7.3%. I don't personally invest in the FTSE 100 because of those low returns. I mean, why am I going to get 4.9% in the FTSE 100 index now when you can get close to 5 in the bank? A little bit lower now, but who's going to take that risk? You're better off in probably in global markets or the US, but I think it's still a good number, and it's good for advertising. I mean, Fourth Way obviously wants people to invest in peer-to-peer lending. It's their business of covering that, and that's a good number for them to put out there. Still waiting for Neil Faulkner to come on the stream too. Neil, if you're watching Fourth Way, come on the stream. You got nothing to be scared of. We're going to have a good chat about peer-to-peer. There's an interesting article about why FSCS protection doesn't really matter in peer-to-peer lending. This was by Folk2Folk's Roy Warren, and in partnership with Alternative Credit Investor. It says the FSCS protection is seen as a safety net for investors and is often regarded as a negative that peer-to-peer investors are not covered by it. Roy Warren, managing director of Folk2Folk, has a thought on that. He says the purpose of FSCS is often misunderstood. It does not cover investment losses, but compensates customers when an eligible financial firm fails. It provides compensation up to the value of $85,000 to customers of banks, building societies, or other financial firms if they are unable to meet their obligations, ensuring that people do not lose out financially if their firms go bust. But there are limitations. Any sums of money larger than $85,000 are not covered. Additionally, the scheme does not protect against poor investment performance or losses due to market fluctuations. It is specifically designed to cover the failure of a financial institution, not investment risks or losses caused by bad investment performance. In general, our existing safeguards, such as property-secured loans and our comprehensive wind-down plan, already offer substantial protection to our investors. The FSCS is definitely misunderstood by people that, believe it or not, even some advanced investors who don't understand what exactly the FSCS covers. So yes, you're not going to get most of, look, if you invest in a peer-to-peer lending company, you have cash in their holding bank account, might be covered by FSCS if that company were to fail, but any peer-to-peer lending loans are not going to be covered at all by FSCS. It's an important thing to understand. It's not risk-free. It's why you get paid an interest return. It's not risk-free, and most of the time it is not covered. Your money in peer-to-peer lending investments are not covered by FSCS nearly all the time. Let's see, moving on. We got a letter from Funding Secure Administrator CG & Co. saying, please find an extension notice of the administration until the 22nd of October 2025, which is a court order approving the extension made on 27th of September 2027. 2024, no surprise here. We know that the funding secure administration is going to drag on for years, so another extension. I would not be surprised if this administration is not finished by 2030 at this point. By the time these loans get sorted out, it's going to be a long time. So, another extension. Lendy also sending out an update saying that an M2 committee was established on the 23rd of August 2023. That's the M2 loans that are designated within Lendy. Now we have had a distribution of the waterfalls for each not for each M2 loan, for some M2 loans. So DFL, Development Loan 3, 6, 22, and PBL loans 64, 157, 158, and 164. So there was some money that was paid out. If you have not logged into your Lendy account recently and you're invested in these loans, you should find some money in your settlement account. So go and log in, get that money out of there as quickly as you can. I went in there yesterday and took a look, and there was some cash sitting in there. Not much, a pittance compared to what I had invested originally, but there is some in there. Also, there is still 10,070 investors who have available funds in their platform account, totaling almost £2 million. So please, people out there, I know you people watching the stream probably are not in this boat, but anybody watching in the future, please go ahead and take your money out and go get verified. Go do the anti-money laundering verification, because there's even 140,000 pounds of people that are verified but have not linked a bank account. And then we have £1 million of people, like almost 8,000 investors that are AML verified and have withdrawal functions enabled and just haven't logged into their account to withdraw. So go check it out. You shouldn't leave money in any of these companies that have failed. You really shouldn't. It's bad business. Don't do it. Assets Exchange update saying they're pleased to announce the share transaction outlined in their main newsletter is now concluded with Stuart Law, the Assets Capital man that most of you are not too happy with. He is no longer a shareholder in the company, has no other involvement or influence. He is out of there, Stuart Law. He is no longer connected to... Should I do a sound effect? Did it work? It did. Look at that. He is no longer a shareholder in Assets Exchange. I think that's a cause for celebration. There is no remaining ties to any of Stuart's other companies, including Assets Capital. In the coming weeks, we'll be changing our name and undergoing a full rebrand. I think that's a really smart move. That can't be helping Assets Exchange. To have that same word, assets with a Z, as far as Assets Capital goes, connected, no good. The investments and ethos will remain the same. Go check out the previous stream, by the way, with Peter Reed from Assets Exchange. Had him on the stream. Good guy. He's doing good things over there. The new investors are well known to our management team, and they are incredibly optimistic about the future of the company. Now this difficult period can be put behind us. We'll be undertaking a fundraise later this year in order to bolster our balance sheet and invest in initiatives to grow the company. And the 4 investors alongside the remaining directors of the company will be the cornerstone of this raise. So it looks like they are going to raise some money. It also says if anyone would like to discuss anything about the managing director, if anyone would like to discuss anything about this newsletter, about Assets Exchange change, the brand name, you can book a call with Peter Reed from Assets Exchange. Have a chat with him about it. Why not, right? Assets Capital also sending out a newsletter. Look at this. Since the closure of the retail platform, we have made a number of changes to the way the platform operates in the runoff environment. They have decided what they want to do now, right here, is start involving assets access account investors in lender votes. They are launching their first lender vote with access account investors included. Lender votes are used in situations where a loan is outside normal terms and a significant decision needs to be made that could affect the outcome for all lenders. In the past, this was inconsistent. With the hands-off investment accounts, we are now starting to invite access investors to vote, as well as manual loan investors. This is because we are seeing some important decisions on loans coming up that could affect recovery levels, as well as the speed of the recovery of loan sums. We are seeing risks of substantial recovery costs being incurred that would reduce loan payments to investors if it did not produce a better outcome following the extra work. This type of go, no-go decision is typical of the balancing of two priorities, blah, blah, blah. We are aware of a large number of access account investors, and so to avoid unnecessary administration burdens for some investors, we have identified a minimum threshold of the level of access account investment in a loan, which is subject to a vote of £1. So access account investors with holdings in a loan of £1 or more will be invited to cast a vote, whereas if you have less than £1 in a investor account, access account loan, you won't be able to vote. If you log into your dashboard, you go to the marketplace, you will see loans on the marketplace screen, a votes tab. You can see it right there on the votes tab. There'll be a list of live votes. Just go there, boom, boom, boom. You should vote. I mean, this is a weird thing because I think a lot of people that vote on these loans kind of know what they're doing, and a lot of people who don't vote, just they don't do it because they don't really understand much to do with the loans individually. I would argue that access investors are probably less knowledgeable than manual loan investors, and I'm not really sure that this change in vote is necessarily going to move the needle that much. You may just get a bunch of people voting on things that they don't really know much about. Access account investors are notorious for set and forget, right? They are investing in the access account, or they invested in the access account because you can't anymore. They did it because they didn't want to be bothered with manually picking out loans. And people that have larger amounts of money in manual loans tend to be the ones, I think, that are more in tune in what's going on with the loans and do vote a certain way. I wonder how this is going to affect the voting on these loans, or actually whether it's going to make a difference. I mean, if somebody has £1 in a access loan, what does that really mean that they know about that loan? Probably very little. So the real question I have is, what is the benefit to assets capital to implementing this? Because notoriously they haven't really done anything historically in benefit of the investors. It tends to be because it benefits assets capital in some way. So is this vote happening, this change now, because a bunch of access loan account holders emailed assets capital and said, hey, we want to be able to vote? Or did it happen because assets capital has a benefit from the way votes, tally? I don't know the answer to that question. I really don't. Maybe they're taking flack for poor recoveries on loans because of the voting, the way people are voting. And maybe this will help. I don't know what the answer to that is. But do log into your assets capital account and check, because there is money probably sitting in your account, in the cash account. As the loans are recovered, you'll see drips of cash that are sitting in your assets capital account. So go in there and log in and get your money out. Let's see here. Oh, mailbag. Hang on one second. Let me go to the mailbag. We had interesting. Just log out of here. it was an interesting email. Hopefully you can see that. It says, Lawrence, would you be able to talk a little bit about your current peer-to-peer ending strategy, as you don't seem to discuss this much on the YouTube channel anymore? Favorite companies, etc. Thanks as always, Brian. I think that's supposed to say lending strategy, because ending strategy wouldn't have anything to do with my favorite companies. But yeah, I don't tend to talk much about my current strategy because it hasn't really changed. But I'll give you a quick overview of where I stand. If you want to go to Financial Thing, to the website, I'll just pull it up. I need to update this. I've been lazy on the website. Okay. But if you go to the website, click on where I invest, you're going to see right here my current peer-to-peer lending portfolio. Is pretty accurate. I think when did I last update this? July 1st. Yeah, I need to do that. But you'll see here all the companies where I have money invested, what the ratio is. You got the bum ones here. You got Collateral, Money Thing, Lendy, Assets Capital, House Crowd. You got LoanPad. You can see my biggest allocation right now is LoanPad. And then we got Cufflink, LendInvest, Crowd Property. What else? Unbolted. And then the rest of them are just basically defunct companies that are in administration. I don't think I'll get much money back from those, but we'll see. What is my current strategy? Well, it's pretty simple. It's avoid bad companies and continue to leave money that is with what I consider to be the good companies and let it compound. Current companies invested in, I'll show you again. LoanPad, Crowd Property, Property Partner, aka LHX Exchange. Well, I would not consider them to be one I would put money in. If I could get the money out of there, I would. I would draw everything that comes in out of LHX Exchange. I wouldn't put anything further into them. Just my opinion, not financial advice. These are obviously defunct, all these ones down here. And then Unbolted, LendInvest, Cufflink. It's pretty easy. 5. And again, I'm just... the only one that I added money to in the last, I think, year has been Cufflink into the auto product when they were offering the one amazing offer, which I thought was really good, was the 10% return on the 1-year product. I put money into that. I'm getting away from manual investments into Cufflink because of the high amounts that you have to put into each manual loan. I'll be using the auto product, the 1 year, maybe the 2 year. I don't know, probably just the 1 year. And then just leaving money compounded in LoanPad. I do think I may add to some LoanPad funds if I get them. And then Unbolted, same. Crowd Property I've reduced a little bit. Just because I was seeing all the defaults. And I'm like, I don't really like that. So I've been kind of dripping out the interest that's been paid. Leaving it relatively the same with the original capital put in, but taking out the interest rather than compounding it. And then Unbolted has just not changed at all. I think I took a little bit out, but it's basically remained the same. LendInvest, exactly the same. I'd probably put more into LendInvest if I had extra funds, but at the moment I'm kind of focusing on putting money into other places. But my peer-to-peer has remained pretty relatively the same, with, again, quite a bit of money just tied up into these defunct companies. And you can see my overall return here. I need to update this for 2024, but it's about 5.5%. I think maybe 5.7, 5.8% over the years since I started in 2016. Obviously, it was much higher back then because the interest rates were being offered were much higher, and I was also taking way more risk. So But yeah, definitely decline. But I still think there's some good investments out there. I just really don't talk about current strategy because my strategy has just not changed at all. A lot of the times because of not having extra funds to put into more peer-to-peer and also having an allocation that I'm comfortable with. So again, that goes to how much do you want to put into peer-to-peer lending. I try to keep it a percentage that I feel is comfortable for me as part of my overall investments, and I really don't go over that. Unlike some other investing that I do, so that's why I just don't talk about my strategy that much. But yeah, it's the same. And if you go to the sign up right here, the top 5 peer-to-peer lending sites revealed, it's going to show you what my strategy is pretty much on there. You can go sign up, get the list. It doesn't change too often. I'll update it from time to time, but it's been relatively the same for a while. Those same companies. So hope that answers your question. Brian, right? Was your name Brian? Is it? Yeah, Brian. Thank you, Brian. Let's see. Fourth Way had an interesting article. How's it going with Invest and Fund, LoanPad, and Capitalize? It's kind of a little bit of a recap on how those 3 companies are doing. I don't personally invest through Invest and Fund, so I don't have much knowledge of them. But Fourth Way has done a full assessment. Fourth Way does a lot of very deep dives into these companies where the companies actually give them the data and pay to give Fourth Way the data, and Fourth Way publishes that. It's pretty technical, pretty in-depth. So it said Invest and Fund, nothing to report on the risk-reward balance. It remains solid. This update is more about a slowdown in lending recently. They've been managing its first institutional lending partners, which include banks and Homes of England. There has been notably less peer-to-peer lending through its online platform. That is probably because, as I say, usually when these companies take on institutional funding lines, they start to drift away from retail. So they don't have to worry about not having enough money to fund loans through retail when they use institutional money. So that's probably what you're seeing there. Invest and Fund says that their pipeline is getting busy again, so we'll see. I think that they'll get away from retail and move to institutional, but that's just my gut. LoanPad lenders facing typical delays for development funding. They've conducted Fourth Way another full assessment of LoanPad. There's a lot of development lending has faced delays in recent times. Over 15% of LoanPad's outstanding loans have needed to be extended. That's not abnormal in the real estate developing lending business. Most of these borrowers have had their maximum term limit extended by a long time, an average of nearly 2 years. However, just 10 loans out of 209 from 2022 are still live and extended. So LoanPad has got a great history in this regard. The property security remains very strong. A maximum of 50% loan to value. You saw the average is 42%. We saw that earlier. 0 losses to date. And just a few loans are officially bad debts in recovery. Meanwhile, you still get spread automatically across 350 of its live loans. The main downside to LoanPad is it's relatively boring. Who wants an invincible investment paying 6.5%? Question mark. And it says, me. Bad use of a word there, invincible. I do not like that at all because nothing is invincible when it comes to investing. Ask Germany in the 1930s, 40s. Capitalize finally has bad debt, which is in recovery. So I think, is that the first time that they've had officially a bad debt? So only 4 other development loan tranches from 2 separate loan facilities are 6 months or beyond their initial loan term, which is less than expected in the current market. So Capitalize still performing strongly. Let's go through the last few bits of piece of information. Gosh, got a lot today. Blend went to the annual UK Mortgage Finance Conference. 4 takeaways. They've seen a number of lenders shedding or significantly reducing their lending appetite for development, commercial, and complex deals. The desire by many lenders, they want more straightforward, vanilla bridging development deals. means property professionals looking for money have been left with fewer options. Bank retrenchment is leading to big opportunities for private debt platforms like Blend and for credit investors to step up as banks exit out of the space. And as banks pull back from many types of lending like real estate, finance, demand for capital is outpacing supply, providing more opportunities. What that means, you're going to see more peer-to-peer lending companies getting more business because the banks don't want to lend to developers. So there you go. Trading 212 time. Oh, hold on one second. I was going to say it was a cause for some celebration because we finally went over £21,000 in the portfolio. It's been a while. Can you see that? Hold on. Let me see if I can zoom out. 1 second. Now I have to do identity verification. Hang on one second. Let me adjust this. There we go. Look at that. £20,994. Let's see if I can go over 21,000 when we're talking about this. Or whether I'm going to jinx it and it's going to go back down to 20,000. Yeah, we've had look at this. We've had a decent run. AMD Advanced Micro Devices seeing a pump. We're now up 12%. Plan to continue to hold that. Amazon, yeah, just almost breaking even on that. Coinbase are in the red because we've had a very volatile time with Mr. Bitcoin. We're now £89 in the red, but we've also taken profits from Coinbase in the portfolio. Crex Reality, 14% in the green. That's Creative Realities. NVIDIA, look at this, 23%. So I think there was a piece of good news today from NVIDIA saying that their chip demand has been insane, which I think could lead to this price exploding. So we're going to hang on to that. 23% in the green. Valco Energy, rising in the oil prices, benefiting Valco, 34% in the green. And Vanguard S&P 500 index tracker, I don't know what you call that, an ETF or fund, up 4.82%. So the portfolio is looking much better, right? Nothing in the red except for that Coinbase and 3%. So patience has kind of been paying off on the portfolio. How much cash do we have? Let's see. I don't even remember. I think there's some cash. Where do you even see it nowadays? They change everything around. I can't remember. Let's see here. Portfolio. It's gone. It's completely disappeared. I don't know where the cash. It used to be up here. I don't like it when they do that. Oh, here we go on the left side. Drop down. There we go. You've got £4,980 uninvested. I need to put that somewhere. Maybe that should go into NVIDIA. That seems like a risky play. This reserve for orders is for Creative Realities when it just drops down below $450 US, but who knows if that's going to happen. Is it $450? No, $420. $4.20. We're almost there, $4.35. This thing was up at $4.76 on Friday, and it just continues to zigzag all over the place. Good stock to trade if you're into that kind of thing. Don't recommend it. But yeah, maybe that 5,000 should just, maybe we should just go for the Hail Mary into the NVIDIA and see what happens. But don't trade like this. It's ridiculous. Let's do one more mailbag letter or email. Hey Lawrence, I know you focus on mainly peer-to-peer lending. Thanks for that. Peer-to-peer has been good to me. I recently watched a video about investing in upstart companies through Crowdcube and Seeders. Seems like it could be a great way to get into some innovative companies very early on. I wanted to get your thoughts on this type of investing. I'm 46 years old and usually pretty conservative with my investments, but I like to have a punt now and then. Hope you're safe after the nasty Helene. Cheers, Barry and Doncaster. Barry, thank you. Thanks for the letter. Look, Cedars, I'd say this is akin to gambling myself. No, some people disagree with that. Problem is, you have to figure out which of these companies are going to do well, and also these are all based on supply and demand. So, for instance, Crowdcube, if you go in there and you buy shares for these upstart companies, how are you going to sell them? Well, you sell them like this. If a business you've invested in grows and lists on the public stock market, is bought out by a larger company, acquired, or buys back equity, you might be able to sell your shares and make a profit. That's bad news. That means if you invest in a company on a Crowdcube, I think this is how it works. The only way you're going to get out is by a stock market exit or a buyout. That is not liquidity. That is just high risk. This says profitable companies may be able to distribute some dividends to their shareholders. You don't know if that's going to happen or not. Now on Cedars, you could sell your shares if you pick up these shares in these companies, but there's no guarantee that your shares are going to be worth more than what you paid for them. Right? Let's see here. Let's say Crowd Property, for example. Their valuation share price on June the 1st, 2023 was £28 and 13p. They raised £4.2 million from 1,600 investors now. And these are people trying to get out and sell their shares. Look at this, a 40% loss from the valuation price. I don't know what these people paid for their shares. They may be doing some weird trading. But these don't look like really good numbers here. People like trying to exit all the way up to some silly prices. Right here, £28. This guy has 6,400. You got people trying to get way more. But a lot of people down here just trying to get out. Maybe they're trying to exit at a loss. So what that spells to me is like investing in these types of businesses is extremely, extremely high risk. And maybe some of the highest risk investing you could do. Just because they're a peer-to-peer company doesn't mean that their offerings on Crowdcube or Cedars are good investments. If we look at Mintos, right? This is a company that made 727,000 euros in profit, net profit, and whose company is valued at 120 million pounds. Now, I'm no expert at valuing companies. It's not my thing. I'm not an accountant. But I tell you, I would not put one single euro of my money into buying a share of a company that has a revenue of 11 million euros and is net profiting 727,000 euros a year of a valuation of 120 million euros. So, quick answer to your quite complicated question, right? What are my thoughts on this type of investing? I'd say if I had to have a choice between punting my money into the ocean or putting it into one of those Cedars investments, I might consider. Now that's a bad comparison. I think I'd rather use it to go on a holiday than as to invest in any of those companies, because I think the chances of getting the money back are very, very slim. I don't know what percent. I think maybe 5 to 10% chance of getting your money back, making a profit. Because you're basically, if you do it on Cedars, you're going completely on demand and supply of what people are selling shares for. So even if the company is doing well and there's not a good sentiment for the shares on Cedars, it means the price will drive lower, and it has no bearing on what the company is actually worth on paper. So because of that, I'm not putting money into any of these companies, right? If the sentiment is bad, look at this price, 1660, when the valuation when it was released was £28. So you've lost a good amount of money on that, 40% loss, because the sentiment maybe on these crowd property shares isn't good. People are trying to get out. of these investments. If they weren't trying to get out, these prices would be much higher. So I would say that if I'm looking to take risk-on investments, this is not where I'm going to be putting money. It's, again, my personal opinion, not financial advice. I put it in Bitcoin 100 times out of 100 over this. But, Barry, if you were a type of person who likes to gamble, as it seems you may be, you like to have a punt, maybe that's for you. Certainly wouldn't be for me. But anyway, that's my thoughts. I would not fall into that trap. It's a really easy trap to fall into because you can see here, right, you've got Revolut, right, trending. They put Revolut at the top because it's a company people know. And when investors get onto these companies like Cedars, they see these names and they go, wow, I could have invested in Revolut and made 5,022%. I could have done it. But that back then, Revolut was not a well-known company. And would you have put a lot of money into a company that you didn't know much about? Let's look at the other side of that. Right, we have a couple of companies that have done really well here, but these are small cap companies. 160 million pounds, gone up 7,451, 54%. It's very small cap companies, very high risk. Let's look at the opposite side, though. Here we go. We've had some that have gone to zero. Bong. We've had some that have lost 92%. All these are big losers. You put £1,000 in. You lose 90%, you're going to come out with £100. That doesn't feel good. And these are all companies you'll never have heard of. They're small cap companies, several £100,000 net, one planet valuated companies. You got some bigger ones that are £34 million, valuations down 29%. Yeah, so it's just high risk. I personally wouldn't do it. I'd tell my family not to do it. Yeah. So, just my advice. I think that's going to do it. I think that's it for today. I think we covered a lot. Let's one more look at trading 212. Hold on. Did we get over? 20,998 pounds. We're £1.90 away with just over half an hour left of the trading day on the stock market. I wonder if we're going to get there. I don't know. Oh, look, 20,999 pounds. Can we get over? Can we see this go to 21,000? Can we see it? I don't know if it's going to happen. It might. Nope, back down to 20,986. There you go. Jinxed it. We're right there. Anyway, yeah, that's a lot. I've talked a lot tonight. Talked a lot. Have a quick look at the comments. Hello, Alan Stratford. Got a repayment from Shodan this week. Should I put your comment in the stream? Yeah, why not? There we go. Got a repayment from Shodan this week. Chadwell Health Loan paying 14% per annum. Very nice. It's Republic now, not Cedars. Yes, you're right. You're right, Mike Powell. It is Republic. You're right. You know what confuses me, though? Why do I get confused? I'll show you why I get confused. I don't know if you can see, but up in my tab, they haven't changed the name of the company in the coding of the website. So in my tab, it still shows me Cedars. So, yes. With that very odd new logo. Yes, it is Republic. You are right. I stand corrected, Mike Powell. Thank you. Quite a few of my Shodan loans are overdue, but they're in good at keeping us informed. Seem to be taking sensible actions. Dave Dawson says, I think there's financial naivety amongst the young. Yeah, I don't know. I mean, if you compare to, say, when I was younger in my 20s and the internet was a very, very young product, you didn't have the information. I think I was a lot more naive about investing when I was young than young people are today because they have access to information. Do young people have the money to invest? Possibly. I mean, you could say, yeah, a young person has £100 a month or £50 a month to invest. Who knows? I think if they wanted to have it, they could have it. Young people, you know, they spend money on stupid things like drinking and smoking that they don't need to do. If they really wanted to have money to invest, they could. I think we should get out of here. Oh, Dave Dawson, you have a few younger family members using LoanPad. Very cool. Lenders have been advised by LAG to consider not withdrawing monies in small chunks of withdrawals, having to have processing costs, which ultimately lenders are paying. That makes sense. Okay, so you're saying that you don't want to withdraw a few pounds here and there because it's increasing the administrator's costs. I get that. So what would be the amount of money that you would say to pull out? Because when I've gone in there, it's usually been over £100, so I tend to pull it out. Although it doesn't affect me, I think letting assets access account holders to vote is democratic. Remember when women weren't allowed to vote? Yeah, it's a bit different. Good comments. I'm reading through them all very quickly because we've been going an hour. It's time to go. Seems some people are happy with Shojin. So anyway, let's wrap things up. Come back next week. Hopefully we don't have another crazy storm and I have to retreat into the woods again with the dog because she didn't like being evacuated. She likes her bed. But see you next week, all being well. And then it'll be holiday time. And off for a couple of weeks. Then back on November 7th. So next week we'll be here, all being well. Is the 10th of October. Thank you, everybody, for spending your evening listening to me natter on about financial stuff. And hopefully, by the time we come back next time, the Trading 212 portfolio will be over 21,000, but it's still not there yet. So have a great weekend. Enjoy the not so miserable weather. Hopefully the sun will shine on every single one of you. Have a great night, and I will see you next time, okay? Take care. Bye.